All right, everyone. A very good morning to all of you. It is nice and early 8:48 Atlantic Standard Time, and today is 20th of October 2024. And I guess it is time. It is time to have a video where we can have some thoughts on what we have week ahead. And as always, before moving to the week ahead, I think it is always very wise to look at what we had in the previous week. So, starting with that, I think let's just move on to Tuesday when we had uh, labor data out of UK, and it came pretty much nice, but it was overall a mixed bag. We had unemployment rate ticking lower to 4%. Average earnings came as expected, with the reasons heading up to 4.1%. The last one was 4%. It wasn't a big chunk of reason. However, we can see that the increase in the earnings has a very significant role in on chances of that the inflation can go up if the average earnings goes up, because people will get more money to spend. And if the supply stays the same and people have more money, and that can eventually create a more demand in the economy, can help boost the inflation. So uh, claimant counts came worse than expected. Claimant counts, those who don't know, when the person is unemployed and he applies for a claimant count from the government, which is actually expense for count can count as expense for government. So increased number is not good. However, we can see that the prior reason got a pretty much chunky upside move. Uh, Revised from 23.7k to 0.3k. I mean, it is an amazing number. If you just look at a whole, the uh, UK labor data we had, I mean, it's a rise, nice beat across the board. So now, uh, with that being said, moving forward to the Canadian CPI report, I mean, this report came really dovish. We don't have all of the data here, so I think let me just get you guys over here. So right here you can see that consumer price index came down to 1.6%, and the prior was 2%. So overall, it was a very dovish statement, with month-on-month core coming as expected, uh, as the prior. Bank of Canada Consumer Price Index came in a little bit better. However, the major one really got ticked lower, 1.6% from 2.0%, which is very dovish. And on September, I think 10th, the Bank of Canada Governor Macklem stated that if they see a nice chunk to the downside of inflation, that they can go for a bigger cuts. We will touch on that later. However, you can see the graph is just perfectly going down and reached at 1.6. I think if we look all the way back to 2021, it is the lowest move since then. So moving back to the Forex Factory, other than that, we had a CPI report after from a New Zealand, came in 0.6%, which is worse than expected, going up from the prior. It was a pretty mixed bag, so we didn't get to trade out of this event. However, it's just was wise to have some key economic events on the radar. It's not always that we get a key event and we just jump in the markets. It's always wise to stay focused and know the market conditions before jumping in the markets. So we had another data out of UK. It was the inflation data, and we can see that across the board it was a major miss. I mean, look at the PPI numbers, look at the core CPI number. Even though PPI numbers wasn't that important as the CPI holds, but it was a major miss across the board. Just looking at the CPI, if I just go to the timely graph here, we can see that the prices, consumer prices, is has been down substantially from past couple of years. I mean, starting from November 2022, we are getting down in a straight line. So perfectly down, sitting 1.7% as of September 2024. And okay, so I said September 2024. It doesn't mean that the data is has a September 2020. This data is not a September 2024. It is a 1 month lag data. So it was probably last month, October. Oh yeah, so it is October. Yeah, my bad. So it's a September data. So anyway, uh, what my point was that these economic data are always lagging. You don't expect that it is October and we will get the October data. Some data, let me give you an example of GDP. So when we get a GDP data, it doesn't mean that the GDP belongs to the current month. Usually it lags by 1 quarter. So that's the 3 months. So with that, these CPI, these labor data, any data we have, usually goes to the prior months. Other than that, we sometimes have services flash PMIs, which got released from S&P. So those are the indicators, ahead indicators. Those are not the lagging. So can give us a bias that where the official services and manufacturing PMIs can land. So it's just some data that are preliminary. Other than that, it's just lagging data which we receive across the major countries. Now moving back to the UK CPI, it came worse than expected, and the across it was a nice miss. So unfortunately, I was on my bed. As you can see, that it was came in nice and early at 3 a.m. So there was no way I was going to be up to trade this event. Now heading straight to the Australia labor market data, came in very nice beat, 4.1%, 64.14 thousand. So we do understand from a policy point of view that the Reserve Bank of Australia is being very hawkish on their statements. They said we are not ruling anything in or out. Uh, there are no discussions about the rate cuts right now. So with the strong numbers, it just gives the bank another reason to say that the labor market is still strong, and we don't see a major downfall in the labor market, which eventually don't give us a reason to go for a rate cut. So uh, it if it could have been a mess, then we could have said that the labor market has been started deteriorating, but it is not. And with that, the bank has another reason to stay with their restrictiveness. And I think we will wait for the other major tier 1 data coming out from Australia, and that eventually will lead us where this bank will go. So Thursday, we had mean refinancing rate from ECB. The bank did 50 basis points of cut. We will go through briefly later. We will touch on it later. So it's just know that we had a ECB policy decisions came out, which was as expected at 35 35 or 25, yeah, 25 basis points of cut. the bank did, which was widely expected. So uh, after 15 minutes, we had a nice beat across the board from US side. Unemployment claims came as expected. Retail sales 0.4% above from consensus, above from prior. Core retail sales, everything, it means it was a nice move. Shorting euro USD could have been a nice trade, but we just uh, we just stayed patient as there was high volatility across the major euro USD pair, and we also was going to have a press conference from Lagarde at 9:45 p.m. a.m. So GDP GDP came in very nice, 4.6% out of China, with industrial and retail sales still staying strong. And this one is going to be the second thing which we will touch on later. First one is going to be the euro, and the second one is going to be the China. We will talk about the LPR, MPR reverse rate program, and we will talk about the stimulus, recent stimulus they have announced, and we will talk about the about the LPR which they're going to announce on Sunday, I think around 10 p.m. So we will touch on that later. Moving forward to the last day of the trading session, Friday, pound retail sales came in 0.3% better than expected, with the USD building permits and housing starts came. So these data are not the tier one data, so it's just good to know, but not something we can trade out of. Now let's move to the week ahead, and let's go some deep thoughts about the LPR, and then we will go through some the Bank of Canada monetary policy, because these are the major events we are having. Monday, as you can see, we have not having much. Some Fed speakers and some Bank of England uh, governor speaking, President Lagarde. Other than that, the major one is gonna be Bank of Canada and the flash PMIs out of Euro. We will discuss about in a bit, and the lastly, we're gonna have a U.S. Manufacturing Services PMIs report. So let's start with the China. Okay, so those who don't know, uh, there are there are MPR, midterm lending facility. Let me double check. Oh, so it's a MLF rate. So China has a key interest rates. One of them is MLF rates, and then the MLF rates goes to the LPR rates. So on a LPR rates, we have 1 year which is linked to the regular consumer loans, and we have a 5-year rates directly linked to the mortgage loans. So how this get calculated. So the National Interbank Funding Center, which comes under the PBoC, which calculates the rate by taking quotes from 20 commercial banks on their respective prime lending rates. So what they do is they send the service to the 20 banks, commercial banks, and they tell them that how much they will charge to lend the money to the customers, and on the basis of that they calculate that where the LPR will stand. Actually, eventually they chopped out the top ones and the bottom ones, and just to get the number in between, staying close to, I think, between 10. So they what they do is they remove the top and they remove the bottom quotes, and then taking the arithmetic average of the remaining quotes. So so eventually with that they get our LPR rates. Now moving to the MLF, midterm lending facility. So this is currently the PBOC's main policy rate, which gets sets monthly. So the MLFE is the rate at which bank can borrow from the PBOC on the basis of 1 year term utilizing qualified collateral. And MLF has a direct impact on commercial banks LPR because the banks always want to charge more to the customers as they are charging they're getting charged from the PBOC, because let's say they are borrowing money from the bank at a 1%, they don't want to lend it at a 1%. They want to charge more, 1.5%, 2%. It depends on that. It depends on MLF rate, which eventually get has a direct impact on commercial banks LPR rates, which get updated several days later. Now, that was the MLF and LPR rates. The rates right here, you can see that LPR and 5 year LPR rates. So 1 year is sitting at 3.15%, and 5 year LPR sitting at 3.65%. Now, uh, talking about the 7 day reverse repo programs, this program has a very significant important on a quick if the bank want to create a short-term liquidity in the market. What they do is they buy government bonds from the commercial banks, the PBOC, providing immediate liquidity in the commercial banks, which can has a really nice effect on the economy quickly. So it goes with like the rate at which the PBOC purchases government securities from commercial banks with an agreement to sell them back in the future, thereby providing short-term liquidity. Common term goes for with the 7 or 14 days. Longer duration can occur. So these are the three major central banks rates, main rates, which they tend to focus on. First one MLF, second one LPR, and the third one goes reverse repo program. So now, uh, now we understand that what interest rates the bank try to use to encourage the economy to move forward. Uh, Now let's talk about the stimulus announcement we had. Let's uh, okay. So we have. I think we should ask ourselves some questions about this China stimulus. The questions can be why they have to choose the stimulus, and if they have announced a stimulus, what is included, what will come, uh, what still have to come from the PBOC, and and the last question, is this the stimulus is the point which can create a turning point for the markets? So we will go to one by one, starting with the stimulus, why they have to announce the stimulus. So we we do understand that the from the China we are having a couple of weak datas. It's been a few months that the China has been not doing so great from a data point of view, which eventually prompted a call from President Xi to strive to achieve the full year economic and social development goals last month. Uh, so with that, the policymakers want to react quickly on President Xi's comments, and they have unleashed their successive stimulus measures in the biggest post pandemic policy, which eventually triggered a furious market rally in China, which we have seen in China a 50 after a big stimulus announcement made by PBoC. So let's talk about now. We do know that the PBoC wanted to announce this stimulus, but as President Xi already made a speech on, they wanted to see a full year economic and social development goals. He want to achieve those goals. I think the PBoC just went to say that that we will unleash these stimulus programs earlier than the market has thought. So, what is included and what is still to come? So, let's go with the 7-day reverse repo rate. Remember, we were talking about the three main rates: MLF, LPR, and reverse repo rates. So, at a reverse repo rate, they decided to decrease their interest rate by 20 basis points of cut, and 30 basis points of cut on MLF, which has a direct impact on LPR. So 50 basis point cuts on triple R cuts. What is triple R? It is a reserve ratio required for the majority of the banks to keep this. The bank has to keep some reserves at their banks they so that they don't go bankrupt eventually. So 50 basis points of cut on triple R rates, which also introduced new measures as well. On a property sector side, 50 basis point cut to existing mortgage rates. What they have announced, which eventually will provide some relief to households, expanding funding. On a banks from 60% of loan principal to 100% of a lending to SOE. So state-owned enterprises, the bank could have helped them by the 60%. Now they can help them out by giving them a loan 100%, so they can acquire unsold properties, and they have also cut the required down payment ratio for second home purchases, which was down by 15% from 25%. So this is a really nice move from the equity side. From a property sector side, they are trying to push up their economy with this stimulus. They have also announced that 500 billion swap facilities uh, for liquidity to support the stock purchases, which eventually has sparked the equity market, as we have discussed before. So the National Department and Reform Commission, NDRC, they have also announced that 100 billion of RMB of next year's budget would be brought forward to use in fourth quarter. So this here comes the point that just a reminder that as this stimulus get announced in third quarters, we don't expect any upside move in the third quarter. We expect that if the moves come in, if the nice data start coming out from the China, it will be in a fourth quarter. So uh, there was another announcement made by PBoC that the one-off cash handout to low-income households. So what does that mean by one-off cash handout? It means that they will pay a lump sum amount of low-income holders who can't meet up with the expenses of every days. So they will give them a nice lump sum of amount along with their income, which eventually will boost their income, and they can I think they can make more purchases because they're gonna have some extra cash on their hands. So moving forward, there has been extensive market decisions over plans for potentially trillions of renminbi of special bond buying to support the further measures, which means that the bank is trying to issue more bonds in order to generate more income out of the markets. They will generate some bonds, they will sell out those bonds in the markets, the market will buy them, and the government will fund themselves to support the infrastructure and support the economic activities in their country. So uh, the last question is this the big turning point a market have waited for? So it is difficult to say at this case, because the policy announced represent a good step in the right direction, but the outcome still depends on the strength, speed, effectiveness of upcoming fiscal policy support to build upon the initial momentum. So uh, initially, aftermath of an NDRC press conference, which fell short of many investors' expectations to build on the momentum. Uh, the lastly, in a stimulus program, uh, the good thing we can see that the shift towards demand side fiscal stimulus and is get cheered by economists, and consumption vouchers as well as cash handouts should be more effective than other policies. Now, at the end, as I said earlier, the stimulus comes too late to impact the third quarter numbers. So we know that the goal of PBoC or present Z, let's say PBoC, they want to hit the 5% GDP by the end of this year. So I think they're gonna fall a little short of that. I think should still be sufficient to achieve the around 5% target. A downgrade of a third quarter and upgrade of a fourth quarter growth leaves currently 4.8% annual growth by 2024, uh, which some analysts forecast, and some analysts has upgraded their 2025 forecast from 4.6% to 4.8%. Now let's talk about the China GDP. We had last last week, I think it was 18th of September or 19th. Let me just double check. So right here, so GDP we had 4.6%. So we do know that the China is trying to hit 5% GDP by the end of this year. So we are currently sitting at 4.6%, which is eventually down from prior, but it do have maintained to meet up the expectations of the market. So we have seen the contribution from manufacturing, which got slowed in third quarter. That is down by 5.2% year of year. We have seen some uptick in services to 4.8% year of year from 4.6%. So with the third quarter data now in the books, China's GDP growth is now at 4.8% year over year. I think that's the best they can do by the end of the year. But they want to hit a full year growth target of around 5%. So that requires a slightly less impressive fourth quarter growth rate than what was previously expected. So we do have to talk about the China property sector because there is some problem going on. The housing starts is down by negative 12.2% year of year. Property investments registers growth is down by negative 10.1% year of year. So, uh, I mean, the policymakers have really emphasizing on halting the real estate decline and spurring a stable recovery, but with the tier 1 cities mostly saw a steeper decline in September, with Beijing home prices there down by negative 1.3%, Shanghai negative 1.2%, and also new home prices fell negative 0.1% month on month, and used home prices fell by 0.9%. It creates a really hard time for the officials to halt the real estate decline. So in order to do that, the announcement of stimulus, I think with the reduction of okay, so let me just have a double check on. I think the reduction on property sector by 50 basis point cut to existing home mortgage rates, and also down payment ratios got declined to 15%, will eventually can have and can stabilize the property sector, but it solely depends on the upcoming data. So we do expect that the fourth quarter we can see some good upside momentums in the China sector, but we can't promise about that. So now back to the LPR rate. So we do know the PBoC is likely to decrease the LPR rates by 20 basis point cuts for 1 year, and for the 5 years same. So uh, with that, the benchmark rates as a major Chinese bank reduction in the LPR, while the latest developments further signaled an upcoming cut to the benchmark rates as the major central banks recently lowered interest rate on China fixed rate deposits. The lastly, PBoC Governor Pan noted the LPR is expected to drop by 25 to 25 basis points on Monday, as well as retweeted that may further lower triple R this year by 25 basis to 50 basis points on market liquidity. So he just simply said that he can lower further in order to meet the market expectations. So we will look for that. However, from a data point of view, any surprises to this data, the market is wildly expecting 20 basis point cuts. If they went for 30, 40, I mean, that's the move. That's the move when we can see that the commodity sections going up, the China equity sector is going up. But it already depends. We will wait for this data coming around 10 p.m. Atlantic Standard Time. Now moving straight to Wednesday. Now about the Bank of Canada monetary policy report. So let me just get you guys to the Bank of Canada policy statement. This is the policy statement. Nothing major. The major one is from the July 2024. We had a MPR report. In the projections, the bank thinks the quarter second of 2024, the CPI inflation will come from 2.9 to 2.7. Core inflation year of year will come down from 3.0 to 2.7, and the real and the GDP will eventually stay close to 1.5 by the end of quarter 2 2024. So we do know that that the CPI report, let me just show you guys. uh, okay, so I just had that data over here. So the CPI, so if you have a look over here, CPI inflation is expected to be at 2.7 by the end of 2024 quarter 2, and with the recent data October, which is a quarter which shows the end of the quarter third. So consumer price index is way below than what the bank thought, 1.6%. So pretty dovish data we received out of Bank of Canada. not from the Canadian economy. And if we talk about the GDP numbers, I think GDP month on month came in nice 0.2%, and currently the GDP is at 0.9% by quarter to 2024. And if we look at the GDP numbers, the bank think that it will eventually move up to 1.5%, but the current GDP is way lower than what the bank thinks, which eventually fuels up for more aggressive cuts. If I'm not wrong, the unemployment rate is at 6.5%. uh, we just had a labor data out of Canada. I think it was just somewhere right here. Uh, yep. So here, so unemployment rate is nice and tick lower, 6.5%. The participation rate stays very close to the prior 64.9%. Overall, it was a very nice numbers came out from Canada. So the labor market is doing great, but not that great. Inflation is very much down, very low from the what where the bank wanted at the 2%, and the GDP is below what the bank had anticipated. So which eventually fuels up on bigger cuts which are possible, according to the statement made by Bank of Canada Governor Macklem on September 10th. So, what thoughts we can have out from this Bank of Canada monetary policy? Now, start with what is priced in. Overnight rate 50 basis point cut. It is wildly expected. Okay, 43.61 basis points of cut is what expected by the market, so which is eventually close to 50 basis points of cut, and the cumulative cuts is 81.22 at the end of this year, which eventually another 30 basis point of cut if the bank does 50 basis point of cut at this meeting. So it is a really close call. Some market participant has expecting the market is really divided between 25 basis point cuts and a 50 basis points of cut. So uh, having said that, it's gonna be a very tricky if the bank goes for 25. I think it won't create much of a volatility. If it goes 50 basis point cut, I think it's gonna be a same story, because we already have inflation. And all right, so if they go for 25 basis point cut, I think we can see some short-term strength in the loonie. If they go for 50 basis point of cuts, we might not see any volatility in the market because it is widely expected. So they also releasing their MPR report, which is something we're gonna look for. We will see that what their thoughts about the forecast of the Canada economy. So uh, as I said, the bank is expected to cut rates by 50 basis points, a cut on Wednesday, and and we do know that. And the September 10th, the Governor Macklem stated that just after a week. The bigger cuts are possible if the economy and CPI is weaker, which we got. On August, the data was soft, and uh, on September we had a strong labor data, and again we had a softer inflation data on September, which is now down by 1.6%, which eventually fueling up another 50 basis point of cut. Now there is a 92% of probability for a 50 basis point of cut. So the focus of the meeting will largely be on the rate decision. However, the guidance is going to be the key part of the announcement. The how the Bank of Canada explained the recent soft inflation data, and we will also look to the MPR for the Bank of Canada economic forecast. So business outlook survey noted business sentiment remains subdued while excess capacity is leading to the restrained investing and hiring. Uh, so some of the firms are expecting that the wage and price growth will remain softened. Some of the analysts at RBC noted that the recent soft inflation data coupled with BOS sees the desk expect a 50 basis point rate cut. So with that, uh, what we are looking out of from this event is if we get a 25 basis point of cut, I mean it can create some sort of a nicer strength in a loonie. uh, if they stayed dovish in their statement, in their MPR, and go by 25 basis point cut, it's gonna be a short-term strength. If they goes very hawkish in their MPR and in their statement, which is highly unlikely that they will do it, but if they did, we can see some strength. If they went with the dovish in MPR, dovish in statement, dovish in Q&A with 50 basis point cuts, I mean that thing can't give us any further trades on a Bank of Canada event. uh, so with that, now let's move to the Thursday. We are having a French flash manufacturing PMIs, uh, and I will tell you why this data is so important. Okay, so just a quick reminder that on a last week we had ECB announcement, right? So we just talked about it, and let me just bring some articles for you guys. All right, so let's start with ECB. So on Thursday, I think on Thursday, yeah. So the bank cuts key rates by 25 basis points cut in October monetary policy decision, which was widely expected. Okay, so deposit facility rate went down from 3.5 to 3.25%. Main refinancing rate went down from 3.65 to 3.4%. Prior was 3.9. For margin lending facility went to 3.65%. So from this, let me just bring up also my Excel sheet here. I do have a nice and okay. So I have highlighted some of the major statement uh, thoughts which they have stated they have concern about. They are concerned about incoming information show that the disinflationary process is well on track. Inflation is expected to rise in coming months before declining to target in the course of the next year. And lastly, they are saying that they're not pre-committing to a particular path rate, which means that they are not gonna go what the path they are on. So the path they are on is one cut, one hold, one cut, one hold. They said that we are not committing to any of that. There can be a hold, there can be a cut. I mean, they're not pre-committing to anything. So in a remark section, besides the rate cut itself, there are no changes to the policy communication by the ECB, and uh, and and the lastly, 122 basis points of cuts rates has been already expected by the market until the June next year. So which is 25 basis points of rate cut at each meeting from now on. So in the Q&A, the major thing the Lagarde says that she's worried about is the economic activity has been somewhat weaker than expected. That is the reason. That is the reason why I'm saying that. That the flash manufacturing PMIs and services PMIs out of your area, this data is very important. Okay, this data will price in the further rate cuts or holds from the ECB point of view. So looking at the flash manufacturing PMIs, 45.1 is which is in a contractionary territory right now sitting, and we already have the revisions from 44 to 44.5. Services PMIs sitting just close to 50, but anything tick up to the upbeat will eventually create a nice upside to the euro area. So moving back to the Excel sheet. Uh, in the Q&A, she said all the data is headed in the same direction, which is going down. Lagarde has mentioned a soft PMI survey 4 or 5 times in a clear indication that they're worried about the growth. Okay, so with that, now we know that the Lagarde is really worried about the PMI's numbers. She's worried about the GDP growth coming out of the eurozone. So looking at these numbers is gonna be a very key important thing, and we will look for what sort of a number we can get. I think getting a worse number is not gonna create that much of a volatility than can create a good numbers. Now with that being said, now moving to the US flash manufacturing PMIs and services PMIs is going to be the last important event of the week. I think on a Friday we're not going to have much of from the any country. So flash manufacturing PMI is expected 47.5. Uh, and flash services PMIs are expected to 50.5.0 out from the US. So any beat in the data will eventually create some upward momentum for the dollar. We do know that the GDP is doing pretty much great in the US, and the labor market is not deteriorating with inflation heading downward. The market is fully pricing in another 25 basis points of cut and a 50 basis point cut by the end of this year. Any downward revision and upbeat in the euros will create a nice strength in the euro, weakness in the dollar, which eventually can create a nice trade in a euro USD pair. So we are also having a UK manufacturing and services PMIs coming out of nice and early 5:30 a.m. Expectation is pretty much the same from the prior 51.5. That is what the consensus are. 51.5. We are having another revisions got really better. 52.8 was the prior and 52.4 is now become worse. Services closer to the prior. So the pound got really tricky to track these days, because there's we have seen a nice strength in a pound. So any beat or miss, I think there is a two-way opportunity here. So we'll pair. It depends on what we get after the BoC and the following the data from euro side. We will see euro pound trade goes or euro USD, whatever we will see on Thursday. So on Friday, as I said, there isn't any tier one data coming out of from any economy. Core retail sales and retail sales, I mean, it's good to have eye on these data, but it's not something that can create volatility. So uh, we will have a look on what sort of data we get out of from this event, but not something that I'm keen to trade on. USD core durable goods and just durable goods is something to keep an eye on, but not something that can create some sort of volatility. Now, with that being said, there was a week ahead video with plenty of data coming out. So we are having a BoC, we are having a major event of China, and with that we are having some flash services and PMIs out of from UK, from Europe, from US side. So with that, as always, if you have any questions, don't hesitate to let me know.